Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. It is May 10th, 2024, and I'm here to bring you some trading levels for the upcoming week of May 13th, 2024. So we're going to take a look at some of the popular trading symbols here. So right now here we're looking at Amazon, and right here, we're looking at a what's referred to as a rally base drop formation here. Price rallies up here, consolidates, and then we have these two very bearish candles down, and there's a drop here. So what we're looking for here is for this thing to drop a bit further and then to return to this level. This is an area where there was an exhaustion of an exhaustion of buyers that occurred. Right here, supply and demand were in balance. And then right here, there was an exhaustion of buyers. And if we think of buyers as the shares that would be bought by the buyers, and we can think of that as demand. On the flip side, sellers, the shares that they're going to sell, we can think of that as supply. And so right here, supply and demand are in balance within this relatively narrow range of about a point and a half here on Amazon. But then right here, there's an exhaustion of buyers. And so as a result, all that's left up here is supply. And so when price returns here, there is the thought that quite often that there is still a downward price pressure that's waiting to be tapped from the supply that's still remaining in this level. And so when buyers return here, we expect another round of selling. Having said that, in order for this to be a good setup, what we would like to do is to see this thing fall further. And at that point, then that would give us an indication that there would be room for this thing to actually move a fair distance once the selling begins. So as a result, this would not actually qualify at this moment as a setup. So we would look for this thing to drop a little further. Having said that, that supply zone there is about 1.5% above where we are now. And however, if it does return here, and it qualifies, this will where we would express a bearish trade. And so what we could do, of course, is be to short the stock here, and other ways to express a bearish trade at the supply zone would be, of course, to buy a put or to do a bear put vertical debit spread. And of course, one could also do a bear call credit spread, where one could, of course, collect premium by selling a call. Let's say around here at 191, and then one could then buy another call above that at, let's say, 195, and that would create a credit spread, and of course would also eliminate the danger of selling a naked call. So that's why, of course, we would prefer to sell a credit spread as opposed to a naked call there. Okay, below, there really isn't any clean demand until we get down to about 173 here. Under normal circumstances, this would be, in fact, a demand zone right here, which would feature an exhaustion of sellers here, and then an explosive move up. But if we look carefully here, we can see in the blue region here, okay, there was that massive wick. Okay, this actually got created after a little downdraft in the market, and then I think a week ago Wednesday, or a week ago Tuesday, there was an explosive move up the next day, and this at one point during the day was a massive green candle, except that, and this is the green candle that occurred at the very end of the day, except you can see that it gave it practically all back at the end of the day, and so it left in its wake this wick here. At that point, then, we really don't have a clean area of consolidation here. It starts out with a clean area of consolidation, but then it kind of oscillates back and forth here. And so what might have been actually a nice demand zone here is no longer the case. So in fact, if price pulled back here, we would not be looking to express a bullish trade, but in fact, the next area where we would be looking to express a bullish trade would actually be much further down. So really at this moment, unless something else gets created next week, we really don't see a buy point on Amazon, like I said, unless price pulls back, makes a right turn, creates another level of demand, and then pops from there. So that's where So that's our thought about Amazon. Before I go any further here, the usual disclaimer though, everything that we do here is for educational and informational purposes only. Precision Trading Labs we are neither money managers nor financial advisors. Okay. Also, before I go on further here, if you look at uh, at this video and you look below the link, excuse me, below this video, you'll see a link to another video here where, in fact, I go through, and it's about 20 or 25 minutes or so, and I take a kind of a deep dive into the supply and demand concept. So if you'd like further information about that, you can take a look at that. All right. So that's the story with Amazon. If we now flip over to Apple, um, here's where we are on Apple here. So um, there's a supply zone about 3.5% up, and then we have this demand zone here about 5% below here. In fact, this is a daily demand zone here. So if I flip this over to the daily chart here, we can then very clearly see there's that drop, base, and then a rally formation here. Now, having said that, this actually coincides with Apple's earnings announcement. I'm usually less sanguine about a gap that occurs from an earnings announcement, because this has nothing to do really with supply or demand, but this is really more, or any really sort of trading. This is a matter of perception. Based on the earnings announcement. So in fact, I'd be this if price returns here, I would be cautious about getting into this trade until I saw evidence that price drilled into this zone and then actually started to come out and went in the right direction here. A lot of times we'll just take the trade as soon as it makes contact with the front line, even though it's going in the opposite direction, running on the assumption that a fair amount of time it's going to reverse. Because this is an earnings gap. There's less certainty that's going to happen. So what we would be looking to do here is to have price drill into this, consolidate, and then start heading back in the right direction. So that's how I would probably handle that. Over here we have a drop formation. So if we get a push up here a little over 3%, this would be an area where we would express a bearish trade. Okay, and so that's where that supply zone is here on Apple. Taking a look at Microsoft, here's where we are now. And so here's where we were last week, okay? And so at the very end of last week, we were this line here, this is May 3rd, okay, which is precisely a week ago today. And so right here, we were, and this is where we had closed last week, and then earlier this week we came up to here. It kind of bounced off of here. It's now revisited it here, and so this is where we kind of finished here. So this thing could either push down here or consolidate in this zone here. We actually don't know at this point, obviously, so we're going to wait to see where we go next week, and then we'll make a decision. And if we look at the 2-hour chart, we can see price came up here, it dropped out of here, it's now revisited it here. So we would be basically what looking to do is to see whether the price starts to drop out of here or whether it kind of drills in here. So I would not be racing to short out of this zone. Okay. Down below here, there is a clear demand zone over here. Again, there's that wick that I described earlier about from when I was looking at the Amazon chart. So there is that wick here, but we do have that clear area of consolidation here, and then there's a pop here. So, and of course, there's the earnings announcement that had occurred much earlier, so that's not affecting the perception of this particular zone here. So if we get a pullback of about 4% here, this is where we would look to express a bullish trade. And of course, again, we could buy the stock or buy a call, do a bull call. Vertical credit spread, and of course we could also do a bull put vertical credit spread, where we could sell premium. Okay, so that's the story with Microsoft. Taking a look at NVIDIA, here's where we are now. There is a clear daily demand zone above here, sitting right near the 52-week high, and that's about 5% up. And then over here, about 4.5% down. There is this demand zone down below here. In fact, if I change this over to the daily chart here, okay, right here, here is that rally. This is a rally base drop formation right there. Okay, and then right in here, this is more of a 2-hour level. You can see that, this green candle kind of overlapping this red one, but you really don't see the evidence of the consolidation until you drop this down to a 2-hour chart, and then it becomes a little clearer there. So about 5% up here, that's where the supply zone is, where we could express a bearish trade, and about 4.5% below here, there is a demand zone where we could express a bullish trade. So that's the story with NVIDIA. Taking a look at Meta, right here, about 3% up. There is this the origin of this gap and a consolidation here. However, if we see that cross there, that is the earnings. That is Meta's earnings announcement. So earlier, where I talked about, I think it was the Apple chart. This Meta had disappointed on earnings a few days ago, and or about a week or so ago, a week and a half or so ago. So again, I have that same concern that I would not just be looking to short out of this, even though in many ways this does qualify for a trade, but because of the fact that this was created by earnings as opposed to trading, I'm less sanguine about the fact that the supply and demand equation is going to work here. So I would be looking to do what's referred to as a confirmation entry, that if price drilled into this zone and then started to emerge from here, particularly in a very bearish fashion, let's say in a 1-hour chart, and if we got kind of a nice red bearish candle there, then I would consider doing that. But I wouldn't just take it on faith that when price kind of smacks into this, automatically short or buy a put. I wouldn't do that here. So that's the story with Meta. And then right here, we do have a demand zone right below here, a little less than 5% down. And there's that rally-based rally formation. And so this is where I would express a bullish trade on Meta. Taking a look at Netflix, and also actually going back, I just realized, going back in NVIDIA, the one thing that also to keep in mind is, while most of the other symbols have recently announced earnings, NVIDIA is actually still upcoming. Okay, so today's May 10th. NVIDIA is on 22nd. Okay, so that's a little less than 2 weeks out. That's 12 calendar days out. And so one needs to keep in mind that, in fact, even if we get to one of these trading zones, whether it's the supply or demand zone, we need to kind of keep in mind that one needs to allow ourselves sufficient time in the trade, unless one wants to gamble on the earnings announcement. Okay, but the other thing, of course, is if you're going to buy options. Of course, as we know, NVIDIA options are incredibly expensive, and even more so with less than 2 weeks to go before earnings. So, in a sense, I would almost be inclined to kind of, unless one wants to, let's say buy a straddle, which of course is the most expensive way to express a trade here, because at that point then you're buying not one expensive option, but of course now you're buying two. So personally, I would be, unless I could figure out a way to sell premium, I would probably actually just not even trade NVIDIA until the earnings announcement passed. So we'll see what happens with that. Moving on to Netflix. So right here, we have returned this again. Here's another example of that earnings, and this is actually a good example of the caution. Again, you had that massive gap, but of course that was due to earnings, and so now that price has returned there, you can see prices just drilled right into it, and it could drop out of here, but I would be not surprised at all that if the market is relatively bullish on Monday, this is just going to kind of slice right through here. Okay, so But having said that, if it does drop out of here, I did start to kind of make some preparation for perhaps analyzing buying a put out of here. So we'll see what happens with that. On the other hand, below here on the 2-hour chart, about a little less than 5% down. Right here, there is a rally-based rally formation here. And so one could express a bullish trade out of here. Okay, so that's Netflix. Taking a look at Tesla and our buddy Elon. So here's where we are now. Okay, again, here is so we had a rally. Okay, notice that there's an earnings gap here. Okay, but because of the fact that that came from down below here up here, this consolidation and that pop there is perfectly legitimate. Okay, because the zone itself is not due to the earnings announcement. Okay, so in fact, if price pulls back about 3.5%, this would be an area where one could express a bullish trade. Okay, and then this demand zone is a ways down, and of course, as I said before, because of the fact that that pop is due to earnings, again, I'm not really all that in love with that. So there's that. Above here, there is a little area of supply right here. Having said that, I would probably I'm usually less enthusiastic about this because this is kind of sitting. It's a small zone and it's kind of sitting in the middle of this swing. I'm really not in love with that. So the only thing that I really like is hoping for a pullback into this zone in order to express a bullish trade. Okay, so that's the story with Tesla. And then the last thing, we'll take a quick look at Alphabet here, Google. I still call it Google, but Alphabet here. And in fact, this is a trade that our subscribers had this week. We had this drop-based drop formation here. That was after that earnings gap here. And then earlier this week, we kind of got into that and expressed a bearish trade out of here. Lots of people bought puts here, and we kind of rode that down from basically 172 down to about 168. So that was about 4 points. So depending on what option you bought, but everybody made money buying this put here and being in the trade for a relatively short amount of time. So that's the story. So anyway, thank you for your attention, and I will see you guys next time. Take care. Bye-bye.